Mr. Aayush Baid, Partners, SKPT and Co. to kindly give presentation on compliance and regulatory aspects for startups.
Good afternoon, everyone.
Good afternoon.
It's truly a pleasure to be here at the Startup Search Manipur. Energy is vibrant, it's very dynamic, and I want to take this opportunity to thank all the organizers, Department of Planning, Government of Manipur, Department of Information Technology, Government of Manipur, NetFee, MTI Hub, and everyone present here. I am Aayush Baid, a practicing chartered accountant from Guwahati, Assam. Today here to throw some light on the topic that is absolutely crucial for the startups, aiming for sustainable growth and success. I am stressing on the point sustainable is because we just don't want to do business for a couple of years, 4 years. We want to make it a sustainable business which in future goes in the pilot mode and grows, has achieved a great deal of success and finally turn into a unicorn, right? So my topic today is compliance and regulatory aspects of startups. As exciting the journey of an entrepreneur is, the foundation on which this trust, credibility and long-term scalability are built is also important. And one of the major factors is the regulatory aspects. If we neglect them, it can delay your funding, invite penalties and sometimes even derail promising ventures. No matter how good your idea is, no matter how good you are doing in the business, but if you are neglecting the regulatory aspects, you might get derailed. So now let's walk through some of the essential compliance requirements that a startup shall be mindful of. Let's begin with the presentation. First, I just want to discuss, everyone must be knowing here, what are the stages of a startup. It's first the ideation, then the validation, then we launch our product in the market, then the growth comes, the revenue stage, and finally the exit. See, when you're on the ideation stage now, your main focus should be on developing the idea and just to touch on the basic compliances. But as soon as you reach to the validation stage, then it is very important for you to have a broader look over the framework and all the regulatory aspects. Because now see, once your product gets validated and you want to launch it, then all the regulatory things come into picture. So once your product is validated, you are ready to launch, you want to go for investment, then you should be mindful of all the regulatory compliances. Now, the first and foremost thing, once you have developed the idea, now you want to choose what organization type we should be moving with. Generally, these are the most commonly heard and commonly followed organizational types. Proprietorship is a sole proprietorship, the person carrying the business in his own name. Partnership, group of people come together, form a partnership and do the business. Again, limited liability partnership. This is also a form of partnership, but it is a body corporate nature with some restrictions on the liability. A new concept has been introduced by a Ministry of Corporate Affairs, that is the one-person company, where only one shareholder and one owner can own the entire company. There cannot be more than one shareholder. That is the one of the drawbacks, I would say, if a OPC wants to go for a venture funding or any kind of funding, because the investor cannot be issued any shares, be it equity or preference, because this is a regulatory requirement of a OPC that there can be only one shareholder. And finally, the private or the public limited companies. This is the most, or I would say the only form which is preferred by the investors where they could invest. So now, as you can see, if you want to go for funding, if you want to approach a venture capitalist, if you want to take any private equity funding, except private or public limited company, no other organizational type is advisable. Now say, here there might be some of the entrepreneurs who are already doing their business since last 2 years, 3 years, might be on the ideation stage, or they have now gone into a validation in a very small scale. They just want to test their product before finally going into market and before going or approaching any investor for some funding. And they might be engaged on their business in the form of might proprietorship, partnership, LLP or a OPC. So don't be worried. There is a provision in the Companies Act which allows you to convert any of these form of organization to a private limited company. And see, if you are already doing a business generating a revenue in any of these forms, then it is always advisable to convert it into a company rather than incorporating a new company. And the reason for which I am stressing on this point is that because there are lots of advantage if you convert it into a limited company. First of all, you can carry forward all the credentials of the erstwhile concern. For example, in the last 3 years, we have done a turnover of 15 crores. So now those credentials can be used when you convert that into a private limited company. Then as soon as you convert into a company, you are ready to approach to the investors, to the venture capitalists for funding. You can as well as offer shares to your employees, because we all know as a startup we don't have that much of capital backing, but we need a team to build a startup. So if we want to attract employees, if you want to build a good team, then yes, instead if you can't pay them money, you have to give them something else. You can offer them your shares, which we call it as ESOP, employee stock options, which can be done in a company and cannot be done in any other form of business organization. Then again, your liability is protected. The founder's liability is protected. It is limited because the founder is a separate person and a company is a separate entity. The directors may change of a company. They may come, they may go. The shareholders may change, but the company will remain forever until it is liquidated. And also, in future, if you grow, you want to go international, then definitely no proprietorship partnership will get any international funding. Only companies can get foreign funding. So these are the benefits if we are doing business in the form of a proprietorship, partnership, LLP or OPC, and we should go for conversion to a limited company. Generally, the time taken for this conversion procedure is 3 to 4 months, because there are lots of approvals to be taken, lots of paperwork needs to be done, filing needs to be done. Government also, Ministry of Corporate Affairs specifically, it also takes time to approve the entire thing. So sometimes, on an average, it takes 90 to 120 days, but maximum it might also go for 6 months. So plan it accordingly. If you are entering into a validation stage, then yes, you should plan from today itself that we need to convert into a company. If your plan is, if your vision is to take funding from the investors, VCs, so that the time doesn't get wasted. In the meantime, your validation is going on. You are also ready to approach for funding. One more thing I want to add here is that with the company, everyone gets frightened. There are lots of compliances to be done. Yes, the compliance level is bit higher than a proprietorship or a partnership firm or a LLP. But yes, there are certain benefits which government is trying to, specifically Ministry of Corporate Affairs is trying to give to the stakeholders. They have introduced a new concept of small companies. See, companies are of two types. One is private limited company, one is public limited company. A public limited company cannot be a small company. Only a private limited company can be a small company provided the entire paid up capital is less than 4 crores and the turnover, the revenue is less than 40 crores per annum, per year. So, as soon as you convert into a company and you are a small company, the compliance burden reduces. If you compare that with a normal private limited company or a public limited company, the compliance level is quite less. The penalties are less if you are not doing it on time, the filings and all. So this reduces a bit of your, what can I say, burden, and also you can be more liberal.
Is it a 4 crore or 5 crore?
4 crores.
As per MSME definition?
No, so MSME definition is separate. This is as per Companies Act, a small company having a paid up capital of less than 4 crore or a turnover less than 40 crores. These both definition needs to be satisfied, then only you will be qualified as a small company. Now, just one more thing. If we are not into a proprietorship or a partnership or LLP and we have not yet given it a formal structure, formal framework, our business, then it is always better to directly incorporate a company, because that would be much easier and it would take around say 15 to 20 days time to get your company incorporated if your all documents are in place. That is a much more faster process. Now once your company is ready, be it as a directly incorporated or a converted company, what are the essential registrations we need to keep in mind? Firstly and foremost, you need to take a trade license, which the generally municipal corporation or a municipal development authority or Gaon Panchayat as applicable. These local authorities issue the trade license. And generally trade license is issued for a period of 1 year. We need to get it renewed every year. There is a nominal fees. I think in Manipur also there is a nominal fees they charge for renewal and they issue for 1 year only. So this needs to be renewed every year. Second, you have to have GST registration. You can also note down the limits for which GST registration is mandatory. If your turnover exceeds 20 lakhs if it is a service unit, and if it exceeds 40 lakhs if it is a goods unit, if you are supplying goods. So if you are supplying goods and your turnover is less than 40 lakhs, then you needn't require GST registration. And if you are like giving services, providing services, then the limit is 20 lakhs. But generally, when we are moving to a startup environment, startup ecosystem, everyone needs to have a GST registration. Or else your buyers, your customers won't purchase from you, won't take service from you. So generally what happens, again, thanks to Ministry of Corporate Affairs, they have introduced a functionality. When you incorporate a company, automatically 5 registrations can be issued along with the certificate of incorporation. First is your PAN number. Second is your TAN number, that is the TDS deduction account number. Third is the GST registration. You don't need to go separately to the GST department for getting the GST registration if you are applying it along at the time of incorporating a company. Fourth is the PF registration, Provident Fund. We'll come to it later regarding its limits and all, but I'm just briefing you out that. And fifth is ESIC registration. These 5 registrations can be done in a single click when you are applying for a company. But one thing we need to keep in mind, once we have applied for these registrations and we have got these registrations, then we have to do their monthly compliances. We can't forego them. Generally what happens, PAN, TAN every company requires. But PF and ESIC, in the initial stages companies don't require. Now since I'm discussing about PF, ESIC, let's brief you about the limits. Under PF is required, Provident Fund, you all must be knowing. Provident Fund is required to be deducted only when the number of employees exceeds 20. And ESIC is required to be deducted only when number of employees exceeds 10. So if we are starting up with a small team, 2, 3, 4, 5, 6 people, then we don't need to apply for PF ESIC registrations at the time of incorporating a company, because from that particular day only your compliance will start, and that again will be a cost for the company. But as soon as you exceed this limit, you must be aware that as soon as your number of employees exceeds 10, you need to go for ESIC registration. As soon as it exceeds 20, you need to go for PF registration.
This is just a reverse. 10 for PF.
No sir, 10 is for ESIC.
No. So 10 fund is the 10. Minimum 10. If you cross 10, then PF is a must. ESI is a 20.
No sir, I verified, we may check
But
again.
anyway, listen, please continue. Thank you.
So the limits for ESIC is 10 and for the PF it's 20. Now once trade license is done, you have got the GST registration, then Udyam registration, which we also call as the MSME registration. All the startup should have this Udyam registration. Then again, startup registration. The Department for Promotion of Industry and Internal Trade issues a startup registration, which every startup needs to obtain. It is for a period of 10 years. The validity is for 10 years. So once you have incorporated your company, you should also apply for these 2 registrations. Udyam registration, which is called also known as MSME registration, and startup registration. These 2 registrations are very simple. You can yourselves go on the website and do. The forms are very simple, very general information is required, and the registrations are issued like immediately. Shops and establishment. Shops and establishment basically comes under the labor laws. When you are having employees, when you are hiring people, you need to have a labor license. It depends on, differs from state to state. In Assam, we call it as labor license. In Manipur, there is a shops and establishment license. The terminology are different, but yes, this is shops and establishment at every state which has, and this is broadly for labor license. Then pollution control board. If we are manufacturing a kind of a product where we are causing some kind of air pollution or noise pollution or water pollution, then that will depend on the individual, the respective startup, whether it is applicable or not on you to take any, if it is required, any consent from pollution control board before establishing your unit, your business. So basically pollution control board is optional. It depends on the category of industry, that particular type of industry, and as already told, PFESIC also depends if you cross the minimum number of employees. But apart from these 2, these 5 are mandatory for all the companies. trade license, GST registrations, Udyam registrations, startup registrations, and shops and establishments. So whenever we have been Netfee and my firm have been partners from last 7-8 years. We are doing due diligence on their behalf for different companies. We always see this problem that the companies don't have their shops and establishment registrations, they don't have trade license with them, and still they are doing business. So see, in certain states, government has issued some notifications that trade license is not required. Then you provide that notification that it is not required. But you should have all those documents in handy. When someone is asking you, then you should not go and searching for them. All these documents should be handy, you must be aware about it. Now, moving to the next slide, just want to brief you about certain, Nixon has already covered about this, certain business models which are not eligible for VC funding. Say, from today's session, what I want is that you all try to understand the regulatory aspect, and when you are filling up these forms, approaching the government of Manipur and MTI for the funding for your startups, you should be ready with all these registrations. And then you should finalize your business model, give a shape to it, and approach the venture capital. What we do is that our idea is ready and we directly approach them. Yes, preliminary screening could be done. Whether this model is feasible, viable, can they fund it, it is scalable or not, that decision they can take. But yes, that will be only preliminary. But if it needs to be finalized, then yes, those registrations which we have discussed about, you should have in hand. And another thing which you need to keep in mind is that your business model should not be a capital intensive model, because then it is not a startup. Startup is low investment, high growth, high profits. If it is a capital intensive, then I doubt the venture capitalists or investors might not be interested in funding you. Then you have to approach banks. So this you need to keep in mind. It should not be a non-scalable business model. That today I am installing a machinery which could only produce 1,000 pieces. Now the demand is more. The demand is touching 5,000. Then again I have to invest a certain amount of money, wait for 3, 4, 6 months, install all this apparatus, all those apparatus again, and then start again. So it should not be like that. The model should be a scalable business model. Like as and when demand is coming, we should be able to scale that model. There should not be low margins and high competition. The margins should be of a substantial amount. And why we say high competition? Because if there is already, the competition is high. Why the competition is high? Because the product is already there in the market. You have to bring something new. That is what a startup is. Innovation. And it should not be a traditional business like some kind of trading business, hardware trading or FMCG trading. It should not be like that. Or a consulting firm, interior design firm, architectural firm, any kind of service firm. It should be something new. So whenever you are approaching, just keep this in mind, that it should be eligible, that your model should be eligible that you can go for a VC fund. Even there are certain D2C companies which are not eligible because they don't have a mode, they don't have a brand name. So you should keep in mind that also, that it is not enough that you are a D2C company and you will be a startup. So just go through your business model once again and see what pivots need to be done, what things you need to add. Now, once your business model is ready, you need to structure that into numbers. Because see, you can give your pitch, everything, but the decision will be based on the numbers. Your financial model should always be better than your pitch deck. And you should be able to explain that. How you will be able to achieve those figures. It should be realistic, it should be practical, and should be achievable. This is very much important. And in the financial model, just to start with, what are the major things you need to take care of is statement of profit and loss. Like what would be your revenue, what would be your expenses, and what profit you will be generating, taxes you will be paying, and then your PAT. Then again the balance sheet, from where the funds are coming, sources of funds, any other liabilities you are having, where you will be applying those funds, application of funds, fixed assets, what fixed assets you will be procuring, right? And if any other working capital assets you will be having, current assets. So that you need to frame. And then the cash flow, from where the cash and what would be the quantum that the cash would be generated. Cash by cash, I mean the funds, the free funds out of profits which you will be generating by doing the business. So once your financial model is ready, you have approached a VC. VC has approved your idea. Congratulations to all. VC will approve your idea. And then there will come a stage where the investor would ask you for conducting due diligence of your company, whether the figures you are saying are correct or not. You are actually doing 50 lakhs a year, your revenue, but you are saying you have done 80 lakhs revenue. So this is the reason, because see, they have just gone through your pitch deck, your financial model, and they're just on the integrity of the founder, based on the business model, they have given you a preliminary sanction. They have given you a term sheet that they are interested in funding you 50 lakhs, 1 crore. But this is the institutional money. So they also want this fund should go at the right place. You should be compliant enough with all the regulatory aspects. So the key compliances which you need to take care of is, see, there are lots of statutes under which we need to do lots of compliances. Some might not be applicable in some of the cases. So let's start with the Income Tax Act. Under Income Tax Act, you just, for the beginners, you just need to keep 3 things in mind. Whether the income tax return of your company is being filed or not. What I have seen, the companies are preparing their balance sheet, it's getting audited by the auditor, but they're not filing their income tax returns. Why? You need to file the income tax returns every year without any delay. Second, we have obtained TAN number, as I said, at the time of company incorporation. There are certain cases where a company needs to deduct TDS at the source, tax deduction at source. Most of you must be knowing this concept, and if you don't know, then just Google it around, you will be able to understand what is TDS actually. So, TDS returns are to be filed quarterly, just 4 times in a year. And if you are not liable to deduct any TDS, you just file a nil return. And even if you don't file nil return, it will do. But for the quarter four, last quarter, you need to file the nil return. 3 quarters you didn't file return, it's okay. But for the fourth quarter, you should file a nil return. Even if you don't have any transactions. You are not liable to deduct TDS, okay. Just file the nil return. Third, tax audit. Tax audit is applicable if your turnover exceeds 1 crore. It is not applicable for all the companies. It is only applicable when your turnover is exceeding 1 crore. But again, there is a relaxation which income tax authorities have given. If your cash transaction, hard cash transactions, are less than 5% of the total revenue, then this limit has gone up to 10 crores. You are not required to do tax audit if your turnover is up to 10 crores, provided your cash transactions are less than 5%. So government is trying to encourage the transaction should be through banking mode. No cash transactions. So if you also encourage banking, the limits will also increase. The threshold limits. And you are not required to, you are exempted from that particular compliance. So in the Income Tax Act, these are the 3 basic things which you need to keep in mind for the beginners. Then in the Companies Act, see, these 3 things, statutory registers, minutes book and share certificate book. These 3 concepts we need to have a bit of understanding why these registers, books and share certificate is mandatory. See, statutory registers are certain prescribed registers under Companies Act which you need to maintain. It is a thick register which you can purchase it online. In Amazon, Flipkart, you will get it. You just type statutory registers under Companies Act, you will get it. And there, simple details they are asking. There is a register of directors. Who are the directors of the company? Just mention their names, their DIN number, their details. Register of members. Who are the shareholders of the company, who are members of the company? Just mention their details. Who are the key managerial person? Like CFO, CEO, CTO, directors. We have to mention those details. There are, under statutory registers, there are 7 or 8 registers which requires only the basic details which you all know about your business, about your structure. Only that you have to incorporate there. Minutes book is that you all must be knowing that in a company, you need to have a board meeting and a shareholders meeting. Board meeting, 4 board meetings is compulsory in a calendar year, in a financial year. And 1 general meeting is mandatory for every year. General meeting is for the shareholders, board meeting is for the board members like directors, CTO, CFO, all those. So, minutes book is the recording of all those meetings. What were the business which were attended in those meetings? What conclusions were made? Who attended those meetings? These all are a part of minutes. And for this, we just need to prepare a book, which is called a minutes book. Format, you can get it online. You will just type minutes book format and number of formats will come. You just need to prepare that book. But the format should be as prescribed by the Companies Act. That you need to keep in mind. Then the share certificate books. Share certificate, as you all know, companies issues equity shares as well as preference shares. So you just need to maintain a book. The format is there as per prescribed as per Companies Act. To whom you have issued those shares. And nothing else. Another thing which needs to be kept in mind is that we need to file 2 forms annually. AOC 4 and MGT 7. Form AOC 4 is uploaded along with your audited balance sheet, and Form MGT 7 is uploaded along with the list of shareholders and directors of your company. This is done only once in a year. And for small companies, the challan fees is 300 for each form. But if you miss out the time limit, then it is the penalty is rupees 100 per day. So you need to be compliant, need to be aware about your compliance calendar and do things on time. Now GST, Goods and Services Act. Under GST, there are two returns, GSTR 1 and GSTR 3B, which you need to take care of. One is of outward supply, GSTR 1, and GSTR 3B is both outward and inward supplies, and you need to pay tax if the tax is being, if there is output tax is more than the input tax. So this can be again done monthly or quarterly. If your turnover is less than 5 crores, you can go for quarterly. You don't need to go for monthly. See, if you are a small business, you are a budding entrepreneur, government has relaxed lots of limits. Again, under GST, if your turnover is less than 5 crore, you can opt for quarterly filing. You don't need to go for monthly filing. Just 4 times in a year, you have to file those returns. But it should be done within the time. Again, there is a late fees of 50 per day if you are not doing it on time. As I said in my earlier part of the presentation, we cannot neglect our compliance. Because if we want to grow, then yes, we need to take care of the regulatory aspect. Goods and Service Tax Act, as we already discussed, GSTR 1 and 3B, you have option of filing monthly or quarterly. 5 crore is the threshold limit. Annual forms, there are 2 annual forms in GST. One is GSTR 9 and one is GSTR 9C, which most of us ignore it. But we need to file it. GSTR 9 is required to be filed only if your turnover is more than 2 crores. If your turnover is less than 2 crores, you are not required to file GSTR 9. That is the annual return in GST. And GSTR 9C is the reconciliation between the annual return and the audited financial statements, which is required to be filed only if your turnover is more than 5 crores. So your compliance will grow once you start growing your revenue. If your revenue is at a very small level, then compliances are also very less. Before it wasn't like that, like 10-15 years ago, for all the companies the compliances were same. But now the government has understood the fact, the difficulties which new entrepreneurs are facing, so they have just given different threshold limits for the different compliances. Now under labor laws, as we discussed, PF returns and ESIC returns, if you have obtained PF ESIC registration, you have to file it monthly. Even if the returns are nil, even if you are not deducting, say you have obtained PF ESIC registration but you have not exceeded the threshold limit of minimum number of employees, then also you have to file these returns if you have obtained the registration. That is why I told you, when you are incorporating a company, be wise enough to select if PF or ESIC is applicable or not. Most of us select that. And while the due diligence, the concerned person asks you about the PF returns, the ESIC returns, the promoters say we are not filing it because we don't deduct. But you have obtained the registrations, then you have to file the returns. So just don't take these registrations because these are not mandatory. Only mandatory when you cross the threshold. And professional tax returns. I don't know how strict Manipur professional tax is, but I think Now, pan India, the states are getting very much strict about the professional tax. In Assam also, from the last 2 years, 3 years, they have started a drive where they are linking your GST number with the professional tax number. So anyone having a GST number will definitely have to have a professional tax. Professional tax is a tax which we have to pay for practicing the business or doing the profession. There are on employees, it is deducted monthly from their salary, and the directors or the owners, they have an option to pay the annual professional tax. The professional tax returns are generally filed monthly in most of the states. In the Manipur professional tax, we need to just check upon, I think it will be monthly only. Now, some of the other factors which are not related to our regulatory compliances but we need to take care of. First is, see, this is the office. You must all be having this kind of office, having AC, fans, electrical, all these fittings, projector and table, chair. So it is very important for you all to take the insurance coverage for all those apparatus you are having. Because if any mishappening happens, then you have a backup from where you can claim that amount. So insurance coverage is mandatory, I would say. And nowadays the premiums have also reduced of the general insurance premiums, so that more and more people are attracted for taking the insurances. Encourage bank transactions, avoid cash, because no one would be able to verify the cash transactions. But bank transactions, it can be verified. If you are saying you are generating a revenue of 1 crore and say 85-90 lakhs is reflecting in bank and balance 10-15 lakhs is in cash, then investor will definitely have a good confidence in it. But if you are saying that 80 lakhs is in cash and 20 lakhs is in bank, then it becomes very difficult for the investor. And today is in the era of UPI and all these stuff, I don't think anyone is much interested in cash. Everyone goes for bank transactions. It's very convenient, simple, except certain form of industries, agricultural, in interior rural areas, still there is a cash transactions are there. But yes, if you are generating that cash, then deposit it in bank, so that it is reflected in your statements, and then make payments out of your bank account. If you are already availing any loan, the founders or in the name of your proprietorship, partnership, LLP or company, then please ensure there are no defaults in repayment. You should be regular enough in repaying the loan amount, the interest amount, because then the proposals might get rejected. If it is in a overdue category or an NPA category, then your proposal might get rejected. You need to clean that mess up before approaching any VC for funding. IPR protection. IPR, what is IPR? Intellectual property rights.
Right.
Nowadays people are becoming aware about IPR, trademarks, patents, copyrights. So we need to protect them. Because VCs also see whether the brand name under which you are working, is it registered or not. And it should be registered in the name of the company, not in your individual name. It should be registered in the name of the company, the trademarks and everything. So these are the major regulatory compliances aspects as a beginners we need to take care of. at the time of approaching VCs for funding. And for the newly incorporated companies, I don't think even 50% of this would be applicable. As you grow, the regulatory aspects will also grow. So once you develop a habit of doing compliances within the stipulated time, then even if you grow, there will be no problem because the habit is developed. And see, it's not only about habit. We are in India is a developing economy, and the compliance, the regulations needs to be followed, needs to be compliant for getting these types of funding, for tapping these types of opportunities. As even sir also explained, there are a number of schemes which the government is providing, banks are providing. You need to be eligible. And how you will be eligible? By being regulatory compliant. Now once VC approves, gives you a term sheet, then what are the major due diligence aspects? I have not gone into detail because it's a long requisition list. I've just highlighted. In due diligence, what happens is that your company records are checked, whether you're maintaining all those registers, books, your income tax, whether you're filing income tax returns, TDS returns, income tax audits are being done if applicable, and secretarial records and compliances. Secretarial means like this annual filing of AOC 4, NGT 7, ROC annual filing. All these stuff are being done in time or not. Operations, business presentations, revenues, which you all are very good at. Now, like you will be good at how to explain how your operations are being done, what are your revenue streams, who are the competitors, all these things. Then about the directors, whether directors are having any other business concerns, whether they are associated with any other concerns, whether they are having any kind of loan, and if they are having any loan, is it regular enough? There should not be any default, as I have already informed. There should not be any default. About the employees, what is your team size? Then again, if you are you compliant with the labor laws, PF, PSIC, professional tax, if applicable. Then if company is owning any immovable property, say you want to establish a factory, you are owning a company, you are owning a land in the name of a company. So whether those land documents are in proper place or not. Then, as we discussed already, intellectual property rights, the trademarks, copyrights, patents. If you have a different technology, a different formula, you should take patents. So these needs to be taken care of. Then routine statutory compliances, GST, TDS, PF, PSIC, professional tax. So under due diligence, financial and legal aspects. These two aspects are covered, and broadly, these are the checkpoints which an external agency will look into. Now see, what are the common mistakes we make as a startup-preneurs? I don't call it entrepreneurs, I call it startup-preneurs. Poor documentation. We are focused on our business idea. We are good at our business. We are generating good profits. But our documentation is very poor. If I ask you, what's your revenue for the last financial year? You will say it's around 20 lakhs. Why it should be around? You should be precise about your revenue. You should be precise about your revenue. That is your, I should say, lifeline. If you are giving your entire time to the startup, you should be knowing every ifs and buts, every figure precisely about your startup. It should not be approximately, around, mostly. So that you can only be able to say these figures when asked if your documentation is proper. If you don't have a proper documentation, you won't be able to reply those questions. Then again, negligence in bookkeeping of accounts. We are just maintaining a bank statement, writing there for which purpose we have made the payments, but there are no books of accounts. Nowadays, earlier there was only one prominent software, accounting software, Tally. Everyone must have heard about it. But there are lots of people from the engineering background or science background who are not from commerce background coming into this startup journey, entrepreneurship journey. They are not very much well versed about the debits and credits. So Tally becomes a bit difficult. So there are lots of software which are coming into market. Zoho, you must have heard about. QuickBooks. These are the prominent softwares which people are now using for their day-to-day accounts. So if you are finding it difficult to enter your transactions, company's transactions in Tally, you can go for these kind of online softwares. These are very affordable prices, the subscriptions, and even they provide some trial also for a certain period. And you can easily enter transactions there, and even, for example, you went for a team lunch. There was in a nearby restaurant, there was a bill of say 2,500. You entered a transaction that you have swiped through your net banking or a debit card, credit card of your company account. You just put it there, team lunch expense, and it has gone from your bank, and you just attach the bill. Scan the bill, click a picture, upload it. In the Zoho, just in say 20 seconds, you can enter a transaction as well as upload the documentary evidence also. So even if someone is doing audit of your books, the documents and transaction is readily available. You don't need to go back and check, what was this transaction about? Where did I spend this 2,500? I can't remember. So nowadays, this can be easily done through phones, laptops, iPads. You don't need a PC to have a Tally and enter the accounts. But yes, most of the accountants, they are familiar with Tally. So they find it convenient with Tally, but it is not that they can't use Zoho or QuickBooks or these type of softwares which are coming. Compliance gaps. As I said, you are preparing your audited balance sheets, but you are not filing your ITRs. ITR is nothing, it's just you are uploading the information of the balance sheet with the income tax department, nothing else. You don't need to do something additional. You just need to take that information and fill up in the ITR. So you must be aware about it. The chartered accountant or the accountant who is doing your audit, he also files the income tax return. You are the ones, you are the entrepreneurs, you need to push to your accountant, remind him whether my return is filed or not. This is the due date. I don't want this hassle on the last day. So you have to keep a follow-up with the accountant also. Ignoring intellectual properties. We say in Manipur, you are doing a business of, you are generating a revenue of a particular brand 5 crore. Now you want to go pan-India. But your brand is not registered. And with the similar brand name, a person in Gujarat is doing the business. And his trademark is registered. And he is doing business of only 50 lakhs. And you are doing here of 5 crores. Now how you will be able to scale up? Because once you again go for the trademark registration, there will be a conflict generated. So this we need to take care at the initial stage of business when we have validated our model, we have started generating revenue. Basically, the after pre-revenue stage, we just need to think upon it and go for the trademark or the patent or the copyright registration. IPs. See, unrealistic forecast. When I was discussing about the financial model, you just don't come with any random numbers. The numbers should be realistic, should be achievable. Because the more realistic, the more achievable, and if your actual performance is close to that amount, then investor will have a different level of confidence on the promoter, on the company, and will be always ready to provide support, guidance. And it is this forecast, it is this the estimated and the projected balance sheets on which your valuation is also linked. The more realistic, the more achievable these forecasts would be, the better your valuation will be. By better, I don't mean the higher or lower. I would say the realistic valuation. And if all these are not there, your due diligence will be there. So even if you have got the term sheet, Netflix is ready to invest 2 crores on you, but if you don't have all these things, you are neglecting the compliances, your due diligence will be negative and you won't be able to get funding. So these are the things for the beginners which we need to keep in mind, take care, move forward. So this is the end of the presentation. Thank you everyone for listening patiently. For any assistance, you can call me or text. I have not mentioned my LinkedIn ID. It's in my name only, Aayush Baid. You can search it. The number is also mentioned. You can call me or text me. This is my WhatsApp number. Sometimes if I am busy, I am not able to attend your call, you can drop a WhatsApp message.